Hello, folks. Welcome to another edition of Market Action. Dave Russell here. All right, market continues just kind of keep pushing higher. And, I look at things. First of all, let me just say this morning when we were doing our futures note, I saw something that I don't know if I've ever really seen before. It was an engulfing candle, but it was a bullish engulfing candle at a high. And that's why, first, I thought maybe we get one of these things and we kind of drop like 7 or 8 points and people say, oh, the rally's over, and then rally back up. Didn't even get that. This is a futures. This is a 7 a.m. hour. We mentioned this in our morning strategy note, and we held that engulfing doji right there. And so after that, we said we thought we were going to rally. We have a strong morning. I am not bearish, obviously, by any stretch of the imagination, but I've pretty much unloaded most of my long index positions just because when you have moves like this, I think you have to take profits. And what will happen is I think the indexes, those are bigger positions. So for me, I just kind of took a lot of profits, and I'm just like, all right, now I'm just going to wait for things that kind of give me some more entries. I do think we'll remain strong into the end of the week, though. I just like to be ahead of the curve, especially because I'm always doing things like market action and stuff. But I did want to point out that this pattern in particular was extremely interesting, and we did mention it in our morning strategy note. One sec. Okay, something else I do want to mention is something that we did pulling up on Research Lab. For the second day in a row, we see a lot of paper in Blackstone Group. Let's take a look over here on the on our premium service, the activity log right here. Basically we said the bulls are being hogs in Blackstone, but for the second day in a row, they're going out to next year, looking for some strength in this name. I think this is pretty interesting because you look at a stock that's just been like people forgot it even existed until like yesterday. So dug into some of this stuff on Research Lab, and this is what we came up with. Now this is something I had to go into the actual database and dig it out. But look, this is a summary of the activity in Blackstone since the end of November. You can see yesterday over 100,000 calls were bought, over 100,000 contracts. You can see how the volume just kind of really picked up here. And then today, as of roughly noon, we had about 50,000 contracts, and the calls were outnumbering puts by 10-1. So look at these 2 days right here at how huge the call put ratio was on these. So I just thought that was pretty interesting to see what's been cranking up in Blackstone. Today in Blackstone, it was the March 32 calls, and we did an alert on that. We also did an alert on the XRT, the retail. I think some of these, the retail fund, obviously a cyclical area. This is a really bullish chart pattern when you see this level. This pattern when you have this kind of rally and then it just kind of holds around there. I'll tell you, this is a hard chart pattern to catch though, because very often, it'll go right back down the range. But usually as it starts rallying, I think the way that when you see it is when it starts rallying off that and you realize, you know what? This is continuation instead of reversal. When you realize that this was the beginning of a move and not just a continuation of a channel. And I think you know that when you can see it start to come off of this level. I'll tell you, I've had trouble with these patterns myself. But anyway, the thing here is that they are rolling the Jan 47 calls to the Jan 49s, looking for XRT to keep moving higher. Pulte Homes, we had call buying yesterday in Masco, Weyerhaeuser. Today, Pulte Homes, they're rolling the Jan 29 calls to the April 22s. Mikey made a good point. I was talking to him earlier. I saw a story a while back that basically said that a lot of the environmental regulations were actually hurting the home builders, and it actually made it harder for them. I always wondered, why is everyone luxury homes? It's all anyone wants to build are luxury homes. Turns out, I believe, based on some of the things I saw a while back, was that the environmental regulations basically raised the price of building a home. So if you're going to build a home, it doesn't make sense if you're a builder to build a starter home. You have to build at the middle to top of the market just to cover that initial cost coming in based on all these regulations that have been passed in the last 5 to 10 years. So I'm not an expert in any of this stuff. I just thought it was interesting that then you see we have, Trump get elected talking about less regulation, and suddenly we have this industry. So there could be something here for the ITB that goes beyond just people buying houses. There could be something here in terms of margins, in terms of less regulation, in terms of a more favorable regulatory environment that maybe we weren't even thinking about before. So I think Mikey made a good point on that, and he's making a ton of money here in these home builders, I know. So it's good to hear what he thinks. Anyway, I just want to point that out in ITB. Here's another just thing I thought was interesting. I look at CNBC's website sometimes to see some stuff. Look at this top story they have just now. Hedge funds mostly missed the Trump rally. This fits kind of what we've been saying, I think, for several years now, which is essentially that there was a bubble in hedge funds last decade, and these guys don't like being long. They're always long, short. They take a simple thing like buy stocks, and they turn into a convoluted mess. They overcharge their clients, which are, for the most part, people like us via municipalities, which just plow their money into these hedge funds, don't make any money. But now we are seeing a real shift back to long-only strategies. And I believe that one of the ways to understand the phenomenon of the bear market last decade was the fact that there was a secular shift in terms of market share from long-only funds, from Legg Mason, from Benton Franklin, from all these the champions of the late 80s. Money left those long-only and went into hedge funds. And now the money's going back into long-only. They're not going back to those simple mutual funds. They're going to other things like ETFs and a lot of other things. But I think the key thing is there was a period in time when people were not – there was a secular shift away from traditional long-only. And I think it's interesting to see it here with the hedge funds. These guys have missed everything. They completely have not been looking for good stocks. I don't know really what's going on, but I just think it's interesting. This is good, though, because the thing is that it means that we have this huge, wide, diverse spread of investors who are looking to put money to work in this market. That means less correlation, and I think that's the sort of thing that using Research Lab, we're going to be able to find where the strength is again and again and again. And so I just want to point that out because let's look for those areas of where the strength is. And today the strength is everywhere. If we look on Research Lab, I mean, look at some of these groups that you wouldn't even think about. But oil refiners and oil tankers, private equity firms. These have really, this is like we mentioned this yesterday, but like snowmobiles and things. I mean, all kinds of diverse buying, telecom suppliers, 3D printers. It's all over the map. We continue to see an interesting focus on consumer discretionary, specialty retail, staffing firms. Technically staffing firms are industrials, but they still fit that bill. These companies right now, with the economy where it is, these companies are another interesting place to be looking. The fiber optics and telecom suppliers, all these were strong. So I think it's interesting that we're just seeing the buying just kind of scattered into so many different areas. There's not even any kind of clear sector. I mean, financials are strong and materials, but this is all just kind of mixed across everything. The financials remain strong today, and now we're seeing the banks, the life insurers, those are particularly strong as well. There's also, speaking of consumer discretionary, Foot Locker. Last earnings report was good. These guys, it was pretty interesting if you dig in because they did really well on the inventory stuff. I thought it was pretty interesting to look into it. The paper wasn't that big. It's up a lot, but they were rolling the Jan 72 halves all the way up to the Jan 80. So these guys have just made a fortune, and now they're just rolling up, keeping a little bit in case it keeps moving higher, but I'm not sure really much beyond that. It wasn't big enough in my opinion. There's also a call roll in Skyworks, SWKS, iPhone supplier. These are the 9th of December. The tomorrow calls were just rolled up by $2 from the 76 here. Let's take a look on the Options House platform. And if we take a look here, we can see 3,000 of the 78s were bought. We need to actually adjust this lower so we can see the ones that were sold, which were the 76s in Skyworks. Those expire tomorrow. There was call buying in Intel, the Feb 37s. I don't know. I think Intel is just, it could kind of work its way back higher here, break the 50-day and move back up. The Feb 37 call, this might actually be one now that I look at it. I just have not liked this stock, but you're looking at a blue chip stock now that's done nothing for like a long time. It could go up and fill this gap. So this actually might be something that's kind of interesting. I'm not really sure. I looked at it and I didn't want to do an alert on it at the time. That might actually be interesting, though. I mean, see, now it's getting through that level. Um, I'm not sure. It probably is going to go up and fill that gap. Um, FedEx has a little more call buying today. The 6th of January, 205 calls in FedEx. Let me get some of your questions up here. What do I think about Qualcomm? All right, let's see what I think about Qualcomm. We have some call buying in it. I mean, I think it'll probably, just kind of keep inching higher. It's got some regulatory risk and stuff, so I'm not sure if it's going to do much right away. What do I think about NRG? Well, this is a strange company just in general. It doesn't follow other utilities. I have to say, this is probably a buy. And the reason I think that is the fact that this is a coal-fired, company. There's a company that it's funny, it's based in Princeton, New Jersey, but basically they focus on coal-fired power plants. And I think we know now that, Trump is going to stop beating up this industry. I don't know a whole lot about it per se. I know it's a very strange stock. And I feel that I can see a bullish case for it. My one concern with it, though, is that I think you have to dig into it to understand. There could be something that could move this stock that is totally not obvious. They could have something like they might have one contract they're renegotiating prices on that is hugely important, and you could spend hours reading about it and not figure it out. So I would say with this stock, I can see a case for it. The chart is looking bullish the way. It looks like it pretty clearly has held that 50-day moving average now, and it's turning. But I would just want to do some more. I want to understand what's going on here. It does look today like there's something bullish happening in it. My MT calls are up 400%. Awesome. You said you bought them for 15 cents and they're worth $8.25. I think you might have mistyped that, but still, I'm glad to see. I actually sold my MT calls today. It was just outrageous. I had to do it. I did really well in these as well. Is Netflix a buy here? NFLX? Yeah, I think so. I think it'll keep plowing higher. I don't think you want to be too close in time. I think you want to I like the end of year expiration. That's what I've said in Netflix, and I think it's still going to keep grinding higher. Excuse me. Do you think Adtran keeps going higher? Yes, and yesterday I think we actually said this was one we wanted to buy out of the money calls and just walk away. But this stock has been consolidating for a very long time. I think this stock can go up a lot, just based on the fact that it has spent look at this. It's just done nothing forever. So I think this stock can easily go to 28. I think yesterday I was saying in this name you wanted to do something like go out as far as you could in time to the 25 calls and just buy something here and then just forget about it. Because the thing is this is one of these stocks that I don't know. It trades 200 shares. These things can be really frustrating. I mean, let's look at a 1 minute. Look at this. Stocks like this can be really frustrating, and this isn't like Apple or Bank of America that is a really liquid name, that has all this nice liquidity, and you can really see the smooth sort of price action. I think a name like Adtran is a name that it's one where it makes sense to do an investment using options, out of the money calls with a lot of time, and then just forget about it. Let me see here. What do I think about PSTG? I took a loss on my Pure Storage. There are too many other things doing good, and I just bailed on it. So I don't know what to think about. I think it's going to be a good name, but I don't want to mess around with a bad stock when the market's going up. Is Disney going up still? Yeah, well, I think we said in Disney the 105 was the level to target with a gap, this gap from back here. So, yeah, we said yesterday that we basically thought Disney was going to plow up into this gap from May. So I think so. Not my favorite company, but it's a blue chip stock. When the market's going higher, it's well off the highs. And I think it's probably a point now where a lot of bad news is priced into this company. And I think ultimately, let's just say in 3 to 4 years, I'd be surprised if Disney still exists in the form we know it. I think it is almost a no-brainer that this company needs to break up. And now that ESPN is not as awesome as it used to be as a business, and I don't think it's ever going to go back. The cord cutting is too strong of a trend at this point, and I don't care if everyone has an ESPN app on their phone. You know, ESPN made so much money from cable that you just are not going to transition from one platform to another and remain as valuable. So I think Disney is now a strategic stock in terms of spin-offs, buybacks, whatever. But that can be a very lucrative and bullish thing. And this stock could easily go to new highs based on that kind of speculation or agitation or whatever. So, yeah, I think Disney now is looking pretty good. And I think that gap up to 105, that was the level we said yesterday, and I still like it. Is Ford still a buy? Yeah, I think it is. I'm long Ford. I think it can go up and fill this gap. I mean, that was a crazy move yesterday, and I think you'll get continuation on it. But right now, think about it. I mean, this is going to be one of those stocks that people say, wow, you know, I missed the whole move in the economy. And, well, look, you have a name like Ford that is like about as American as apple pie, and then you put the whole thing in of the pickup truck, which is also about, I mean, it's so obvious to me. I think, I mean, I'm going to try to be complacent, but I think, like, this is a stock that if you are a big investor and you've missed some of this Trump rally, here's a stock that is a cyclical. It has done nothing forever, and it has a gap to fill to 14. I think, you know, the options in this stock are so liquid that I think this is one that you can do well with. So I think the stock's going to go up. At least I think it's going to go up another 50 cents. So I'm still long Ford myself. Is ISRG a buy now, Intuitive Surgical? You know, I don't think healthcare is a good idea this year. I do think that, you know, the sector has been. Let's take a look over on Research Lab at the spider funds. We take a look here at our select spider funds. I think we can see that, you know, XLV is bad and getting worse. And I do believe that when you look at this on a year-to-date basis, we like have like 3 months or 3 weeks left in the year. It's something like that. You know, this is not the time to be buying the bad sectors. This is the time to be short the bad sectors. There's nothing bullish on this chart at all. I mean, it's got a bearish descending triangle. If you look at this, the sector is bad. I think this stock's going to go lower. I've always liked this name, but it doesn't matter when when the sector's bad. The sector's bad, and you know, look at this. I mean, yeah, you could say, yeah, it's got support here, but I think, you know, this is too early. There's nothing at all giving you the signal here. The 20-day is under the 30-day. They're both falling. The 50 days. Look at the sequence of moving averages here. It's completely bearish almost. You know, and the only thing that's not bearish is the 50 and the 100 are over the 200. But, you know, this has got the bad momentum. I think this stock is weak, and it could get weaker. So, no, I would not buy ISRG at all here. I wouldn't short it because I think it's still a great stock. I don't think it's a great idea to be shorting stuff when the market's so bullish. But I think right now, my plan is I'm going to come in and be aggressively looking to buy healthcare in the new year. I'm hoping that we get Acadia back at that low, you know, around 21, 22, stuff like that. That's what I'm hoping for. You know, ISRG is a good name, and, you know, let's actually set a price alert on it because I would love to own this stock, you know, under 600, you know, maybe down here. This was an interesting breakout that we had back here in May. Look at how it did this thing, and then it just took off, this weird little jiggle, you know, somewhere. I don't even know what you call this weird little, like, failed breakdown back in March. I'm going to set a price alert at 580 and see if we get it. Let's say 581 just so I don't miss it. Okay. Speaking of pullbacks, I'm looking to get long Taser here. I've got a limit order down around 210. I think I probably got filled on this one. Yeah, I think so. So anyway, Taser though, I mean, they didn't get some contract, but I still think you're looking at a pretty good name. I had been originally buying it at 24. They had a good earnings report. Here's one of these companies that I think is one of these companies that's a little bit like Netflix a few years ago, or like Garmin. When the bears, they just keep shorting it and they just keep having good numbers. So everyone is so convinced that Taser is like going to lose their business, and they just don't. So I like Taser here, right at 26. Is Chesapeake still a buy? I don't know. I mean, this was one that, yeah, I think it's probably going to run higher, but I don't know. It had this big, kind of spinning top here. And if you look at natural gas, I actually sold my Chesapeake calls yesterday. I told people on chat. I took a small loss on them and just said, this is going to be. I was just not certain, and I had too many open positions, and I just wanted to. That's why I also took a loss on Pure Storage. I had a lot of winners, and I'm just not going to hang on to losers right now. I'd rather have cash free so that I have opportunities to do things like add to Taser. I think natural gas right here is just a little bit unclear to me at the top of this range. I think the risk-reward, there's a 50-50 shot that this does retreat back down the range, and I think that'd be bad for Chesapeake. So I'd rather just wait for a clearer entry. It could just melt higher because it has a lot of short interest, but I don't think the risk-reward is good. Another thing I did today was I bought Matador, which we've been citing recently on this pullback. I bought it down around 25 and a quarter and put it up on Twitter. But I think this is one also that, we had talked about it initially when they were doing this secondary offering, but they did the secondary offering. They did a debt sale. It seems to have all gone pretty well. And I think you have just right now an oil and natural gas name that seems to have some good stuff happening. I always like to do things when you get big institutional investors. I'm not a geologist, and I don't know really how to understand what makes one company in this space good versus another, aside from looking at the chart pattern. But the thing is that when you have the big guys come in, you have institutional investors. These guys actually are geologists, and they actually are engineers who actually understand things like how to get oil out of the ground, and not just how to get it out of the ground, but then how to make money from it. A lot of these guys put a lot of time and effort in the last week into researching Matador, and it looks to me like they like it. So you know what? I figure, that makes sense. And one of the things I've said before about, when you have things like secondaries and stuff like that, it is very interesting to actually think about credit. A long time ago, I made a bullish call on, what was it? It was, it wasn't Netflix. It was IMAX. And I noticed IMAX. It was back in the end of 2008 or early 2009 or something. And I said to buy IMAX, and but the key thing is that IMAX in the end of 2008, they got an increased bank loan. And you think about that, a big deal. But you know what? In the end of 2008, I mean, you practically had to be, nobody would give you a bank loan in the end of 2008. And this company had an upsized credit facility. And then come the next year, the stock went up like a gazillion %. And so I think it's interesting that when credit guys see stuff, don't forget, they have access to non-public information. Moody's and S&P, they see stuff that equity investors don't see. So it's not very often, but when you see things like a secondary offering or a bond sale that gets upsized or a bond sale that goes badly, pay attention to that. If they do things like, wow, we doubled our credit facility and we cut our lending costs in half. Well, that's interesting. When Moody's upgrades a company from, double B minus to double B, that says something. And I'm just saying, think about it. Every now and then these things pop up. Now, you have other things when a credit rating is not a big deal, like when one company buys another company and they get downgraded because they're borrowing more. Who cares about that? But sometimes these credit guys will see things, and I just want to mention that because Matador looks like it's another thing where there was a lot of due diligence done on this name recently, and it looks like it went well. So I just want to point that out. USG, this thing is just explosive, and I mean, I'm sorry I missed it. It looks like it's just going to accelerate higher from here. We probably have to look at the longer-term chart. I would say this. Yeah, I think this one is, I mean, a lot of these stocks have done nothing forever. Look, 5 years basically at $30. When this thing starts to run, and this is probably going to just accelerate higher. This is the kind of stock that could end next year at 50. Just because it's done nothing, and then you add on top of it an improved housing market, it can just take off. Let's actually take a look here at. I mean, look at this. This is like Bank of America. This is what Bank of America looked like about 6 months ago. It's like, oh no, 2008 sucked. Well, you know what? It's not 2008 anymore. And a stock like this, again, same sort of thing. This is one where I think, a play in something like this, in my opinion, would be to go out to, 13 months into the future, and something like these out-of-the-money calls. Now, look, the bid-ask spreads on these are horrible, but, you just can bid in the middle and see what happens. And then you can just let it go. And I think that's the sort of thing that could work in a name like this. It's not a super liquid name overall, but I like this. And here's another one that actually came up, which I think is another one, Mohawk. This one does flooring. This company has been in a really tight little range here as well. This one, look at this pattern. We've seen this pattern a few times now, and I'll tell you, this is a difficult pattern sometimes. It's this kind of cup and handle thing because you think, oh, it failed. But you know what? This one, I think, if you want to know one now that I think could be the next USG, this one, because it made that lower high, that higher low right there, and that kind of triangle. I think this is one right now that you could see a breakout in Mohawk. Let's compare that to USG. It's kind of what USG did right here, when it had this rally and then it held and then it just broke out. So I think Mohawk was actually on my list today. When I started seeing this broad theme of strength in the housing area, I started looking for other ones, and we do have Mohawk here as having breakout potential. Masco as well, taking out that 50-day moving average. We had calls on this one yesterday, but I think there's another name that has a pretty decent shot of a move back up to 36, 37. What do I think about AT&T? I think this name is going to go back up to 42, 44. It basically ran up to our target a little bit higher, paused, and then just cranked higher. It's really interesting if you look. In our morning kind of strategy note, an addendum to it, we do this thing called groups and sectors, which you can also see here if you go to Research Lab Groups. There's a little write-up that I do now every morning when I analyze where the strength has been. And what we did see was we saw technology has lagged, although wireless and big telecom stocks have been strong. Well, look at T-Mobile, look at Sprint, which have just been very powerful to the upside. And then you look at things like Verizon. We had identified these and back around these levels on market action. I know we cited these, and we were able to get some calls on them that worked nicely. I think AT&T, though, this is an area I think that is going to remain strong. And the other thing that's kind of interesting now is, and I'm watching this, excuse me, but, bond yields here, I think that the brutality of their run higher for the time being might have kind of, happened. And, these could just kind of pause and drift for the next few days before the Fed. And if that remains the case, then AT&T will also be supported by that. It's pretty amazing to see the strength in AT&T when you consider what's happened with interest rates. Speaking of interest rates, today, it's kind of what I expected with the ECB. They said, hey, we're going to taper. And the market, it was all over the place, but it really does seem to me that I think that we're at the end of this crazy deflationary thing that in many ways, this started a long time ago. I think it started in the mid-'80s, the deflation, or the early '80s. It started with Paul Volcker, and it's been a downward spiral of prices that first started with interest rates. It started with the Soviet oil coming online in the '80s. Then it accelerated when China came on the scene and started dumping cheap products into supply chains. and I think it's over now. And we're seeing a real turn, I think, finally in prices going back higher, wages going up, things like that, and that means interest rates are going to go up. So I think that, you know, I think right now what the ECB did, it's just going to basically make it easier for the Fed to return to normalcy. And I do think, though, that it's bad news for these emerging markets because, you know, China allegedly had good trade numbers, but I'm not so sure that it was led by commodity imports, which, you know, they have a tendency to hoard copper and stuff. So I saw a mixed article. I saw the Japanese GDP was revised sharply lower. Mikey sent me an article at how, you know, they might have better consumption than thought. I do think when it comes to Japan, though, it really doesn't matter what happens in the Japanese economy. The main thing that matters is interest rates going higher and the yen weakening. Look at DXJ. This one has the February 55 calls bought. DXJ has been active recently. And let's take a look over here on our activity log. I know that we've seen DXJ a few times. And I had mentioned the Japanese banks recently. Kind of wish I had done this upside calls in DXJ, but this thing is just cranking higher. And I think this one also can just continue to run. Speaking of emerging markets, the February 34.5 puts were bought in EEM. I'm not a big fan of EEM because it contains both good and bad stocks. You know, Russia's not really an emerging market when you really think about it. Yeah, it's an oil producer, but it's a lot more than that. And so, I mean, India and Russia, I mean, they don't have very much in common. China and Russia don't have much in common. So EEM, I think, is just kind of a muddled instrument. They're buying the Feb 34.5 puts in this name, probably just a hedge in this one. There's call buying in Mobileye, the Jan 40 calls bought. In my opinion, this is exactly the kind of stock that you don't want to own. You know, it is basically a very expensive sort of, you know, high multiple secular growth stock. When you consider just autos are strong, this stock isn't. Chips are strong, this stock isn't. Doesn't look good to me. So I think this one is probably going to keep going lower. I really think. Look at how it just, you know, bearish ascending triangle right here. And I also think that, like, the whole Silicon Valley thing is just, you know, this is just something of a societal shift now, and these guys are not in charge anymore. And the idea of self-driving cars, I mean, who needs a self-driving car when you can, like, you know, pump oil? I think that's where investors now are like, hey, you know, I'd rather see domestic oil production than see a self-driving car. I think that's where the mojo is going in terms of sentiment. So these kind of stocks are just not so exciting now. How high can AMD go? Well, I'm not sure. It's got this is just insane. I don't even know. I mean, man, I don't know. I mean, 13 or 14, I think. OHI, Omega Health. I don't know. You know, these REITs. All right, so it's interesting. I was noticing today on Research Lab that we actually have the senior living. And I think this might be one of those. No, it's not. Maybe it should be in that group, but I know in Research Lab today we saw, you know, there's been a little bit of a shift to some of these, you know, real estate names. You know, so somewhere here I saw senior living stocks were strong. Let me see something, because I wrote it on my notes. Yeah, senior living. Well, who's up there? Brookdale. I wonder if OHI maybe should be in that group. It's like nursing homes and stuff. There seems to be a little bit of strength in this, and it's also interesting if we look here on Research Lab at, if we go back to the sectors, you know, we can actually see that, that REITs have actually been kind of trying to find their footing recently. So if you look like in the last 2 weeks, the real estate investment trusts have been outperforming the S&P. Look today, they're outperforming. In the last week, there's been a little bit of value hunting in these. So some of these I think are looking kind of interesting. Like I said, with bond yields, we've priced in a lot of higher interest rates. And with bond yields now potentially kind of stalling, I think some of these names, people are coming into them. I don't like it myself. I think that, I think a stock like this, I don't think it trades very much in terms of options. I think it's got some resistance here. It might go a little bit higher to like 32. I think this name is going to consolidate. I think you're going to get OHI back closer. I think you'll get it under 30 again. So I think you will get a retest under 30. All right, I'm going to try and answer it more intelligently on AMD because it's been too amazing of a move. Let's do an interactive zoom here. Let's just go to a weekly chart. All right, so we're breaking that level from 2010. 12 is the next stop. I'm glad some of you guys managed to catch that. All right, is there upside in Las Vegas Sands? Yeah, I think so. This is similar to a lot of these other stocks that are just, they've gone nowhere for a long time. It's consumer discretionary. Yeah, I think so. Absolutely. Yeah, this is going higher. I think this stock here can go, if you look at this, late 2014, had some trouble around 66. LVS to 66. Let me just try to. Restoration Hardware. Man, this has been a rough one for me. I know I've not always been accurate in this one. I do think, all right, look, we see this. This candle just keeps working again and again. And the one thing about a name like this is I feel like it's going to have another pullback. Maybe to 35, maybe a little bit lower. I think right now it's a dangerous place to try to do anything because, it's at the top of the range and it could just slam down one more time and then take off. I think waiting for 35 in it is probably a better bet. Or waiting for a breakout through that September high. Let's call it 40. The earnings are on the 8th. Wait a second. Earnings are tonight. I have no idea. I mean, this thing's just going to jump on earnings. This is, to me, a company that is, like, untouchable. It's too weird. I mean, they're, like, basically trying to reinvent their whole business model, and, like, it's basically like, Russian roulette. Cemex, well, we were bullish on this one just a few days ago, and it's been moving higher. And this name is just a great stock, and I think all the Mexican stuff is just priced in, I think, now. We had actually had a list of some of the Mexican stocks that we viewed as being, like we said, EWW was at a bottom, and it bounced. We said the same thing about America Mobile. and it's coming off these lows. But I think Cemex is the best of them. This is just an awesome stock. I mean, these guys were doing all kinds of good stuff before in terms of like fixing their business and things. Now you have infrastructure, you have the inflationary thing. So I think this will probably, I think it's going to move higher. Wow, this market is just not stopping. I should have taken my own advice and waited for the rally just until Friday's close. I bought Common in Matador. So I just bought it long-term in my IRA. What do I think about a breakout in Potash, POT? Yeah, I think a name like this will probably just gravitate higher. I mean, you have a resistance line across here that it remains stuck at, but I don't think for long. I think this is another one where going out in time makes a lot of sense. Something like maybe just give it a little bit of time at the beginning of the new year, but something like the March, 20 or 21, something like here, like the 21. Look at this call spread here, like the 21.22. It's 30 cents for that call spread. I mean, this stock could go to 22 by March, and I think that would be something where you'd have a pretty good risk reward. Yeah, I think this stock I think can break out and have a lot of upside. Wow, this market is unbelievable. Unbelievable. A new high as we speak. All right. Is Win staying in its channel or is it going to break out? It's like everything is just going up virtually here. I got to say, I mean, in this market, the way things have been trading, I have to think this name's going to go higher as well. This chart pattern is very similar to what we were talking about earlier, this kind of cup and handle thing. In this market, this pattern has been working in the last few weeks, so I think this name is going to rally as well based on that. What do I think about St. Joe Company? This is a Florida real estate company. I mean, this company probably... I got to think, and I'm not an expert on this, but I got to think you want to talk about environmental regulation. I got to think that building properties in like wetlands or whatever, I got to think that these guys' income statements just got a lot healthier in terms of margin, in terms of lawyers and things they don't have to pay for. So I got to think that this company, which owns a bunch of land in northwestern Florida, I think it used to be a railroad. It was one of those companies back in the old days that like it got a huge land concession in like the 1800s, and then they turned it into a real estate company. I think that's their story. But anyway, this stock has been just dead in the water forever. And I mean, this stock. Look at this. I mean, think it's just since it fell even before the property thing. I think this name has potentially significant upside. And I think the real value of this stock is probably so much higher. So I remember about 2 years ago, this company, they had land on their balance sheet they were carrying for $15 million, and they sold it for $500 million. So you got to think that their book value, because the heading is when you own assets for 200 years, you don't recognize those. You don't mark those to market. So, I mean, this company is probably worth a lot more than you would think. It's $1.5 billion, and they own a lot of land. So you got to think that this one's going higher. Let's take a look at the options in it, because I would think this is one where also something like the June 25 calls or something, the 24s, just. Look at the 24s here. They're basically 65, 85. You could probably bid 70 cents for those calls and get filled and then just not think about it for the next 3 months and then be very happy on the other side of it. What do I think about Apple? I think Apple will probably melt a little bit higher just because the market's good. Not a fan overall of this name, but I think when you look at how strong the market is, and also look, it's this cup and handle thing. I think it's going to go back to the upside now. I think the market is too bullish. The Dow is too strong for a stock like this to just get left behind. Why is VIX up with the market being up? It's a good question. I was kind of curious about that myself. I think the VIX is holding a long-term level down here around 12, and I just think that it probably doesn't want to go much lower. If you have IWM in your IRA, would you recommend taking a profit here? Yeah, I already did. I was owning TNA in my IRA. And I basically caught almost all the move until about $1 ago, and I just exited before. Probably should have held on to it, but no, look. I think that we're probably going to keep inching higher for probably into the close, and I do believe though that like when you have something like this, you don't want to sell too soon, but at the same time, like you have to ring the register, and there's always opportunities, and so there's no signal yet to sell anything. Let's take a look at the S&P again. I do believe the S&P is the right one that will tell you what to do, and then when you have the S&P, then you want to look for the just because the market's going up. Then when the market's going up, then you want to look for the right place to play in terms of is the NASDAQ or is the Russell better. But I always make my decision based on my strategy note on the S&P 500. If I was bearish on the S&P, I wouldn't be buying the Russell, for example. I do believe that the S&P is everything, and then everything else is just kind of a question of, it's kind of like, what color do you want your car to be, not whether or not you want a car. And a bad simile, but I think you understand. There's nothing here that signals anything like a pause to this. Nothing. There's no reversal patterns. Everything about this remains bullish. There's a bullish ascending triangle down here. Just looking at anything in the nearer term. There's nothing that says this is going to stop yet. So I don't think I would make a case of that. All right, I have to jump. Let me just see. A few other things I want to very quickly mention. And these are just names that I just continue to like. I mean, there's a lot of things, but, I do think that Ford and General Motor, I think these are names that into year-end, people are going to buy them. I'm long Ford. I think GM, also here. GoGo, which I just keep looking at. I like this name. I mean, here's what's interesting about it. Today we have a bullish engulfing candle. It's finally giving us something. Bullish engulfing candle. It's holding that 20-day moving average. I think this name is going to be one that, I'm not saying to buy a lot of it, but this is one of those stocks that could just go on a nice run. And I do think that now, the index goes so much, but you do want to look for individual names too. CHRW, my breakout list is CH Robinson. We mentioned this transport name. Citrix Systems, which I think is another name on the verge of a breakout. And then also Chicago Bridge and Iron, which I own, is on the verge of a breakout to that 200-day moving average. And then Westlake Chemical, which I own, is in like this perfect pullback here, the way it held 56. I mean, look at this. We cited this one on Twitter, but I think this is another one that's going to keep going higher. Long-term investments, not trades, but platform specialty. I mean, this stock is kind of like Potash or something. I mean, if you look, they've had some good stuff, and the other one is LSB Industries. Both of these are chemical companies that have all kinds of potentially attractive stuff packed into like, a small company. I also remain long Alta Salon. I think if it breaks out through this candle, I don't have time to dig into it, but if you look at like a 15-minute chart going back about 2 weeks with the interactive zoom on the Options House platform, you're going to see 261 is a level on this stock that it needs to break, and when it does, I think it could take off. So, I mean, I like Alta, and I'm looking, I think, on a breakout through this high the day after earnings. That could be the one to look at. All right, very quiet overall calendar. Broadcom reports after the bell, and so does Finisar along with Restoration Hardware. Consumer sentiment tomorrow. Then it's very quiet until the Fed on Wednesday. Other things I wanted to very quickly mention was that there is a story on CNBC saying that the Case-Shiller, adjusted earnings PE ratio says stocks are too expensive based on the economic cycle, but I would just posit what would happen if this economic cycle is a little bit different, that actually this economic cycle morphs into an acceleration instead of a pullback. And that's what I think the market sees, and that's what I think the data is confirming. We haven't seen anything that indicates a pullback. Jobless claims today, again, 258, very bullish. This economy is not showing real signs of slowing down yet. So I would argue that this article on CNBC, that in this case that Case-Shiller index is going to be wrong. And then also it's interesting that they also had an article, for some reason today CNBC seems to have a lot of interesting stuff on their website. McDonald's, Yum, Coca-Cola, International Paper, all among companies losing interest in China. Kind of like we said a couple of days ago in this webinar. I still think that's something, we have it as our long-term list down here, that China is at risk of further weakening. And it's interesting, I have found in the market, when you have a hunch, you have a reason to believe something, and then you start getting confirmation and other people start saying the same thing, there's usually meat on the bone. So I just want to point that out. Hope everyone has a great day. We'll be back tomorrow. Remember, if you want to get my summary sheet, it's on the website under our community area. If you go to daily webinar, you can access it through here. And then also, if you want to get my morning summary, my morning strategy note, you can email me at david.russell@optionmonster.com. We'll talk tomorrow. Take care, folks.